Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the Forex market. So since market currently is a bit quiet, you can see not really lots of action on the market right now across the board. That gives us the chance to take a look at some currencies that we rarely taken a look at. So recently we have taken a look at the Japanese yen, but mostly it was not because we do it rare, but because some really important events that have happened in the Japan and recent performance. So all the stuff that we discussed yesterday. And another really interesting currency is the Great British Pound. It's also in kind of a unique performance. It's just because if you'll take a look at the daily chart, for example, on pound, you'll see that it shows no reaction at all on recent dollar weakness. So if we see some upward action on the gold, on the euro currency, and the Japanese yen, is of course on a dollar index, but on the Great British Pound you do not see any performance to the upside, any action. It means that since major conclusion that we could make, so that actually if pound sterling shows no upside reaction even on the background of the dollar weakness, it means that itself the pound itself is also a bit weaker than the rest of the market, and that's really might be important conclusion that could shed some light on the performance. So first of all, starting on the monthly chart, here is guys everything stands the same. So on the euro currency, on the gold, everywhere. So we're talking about the possible brand body trade. Thrust down, close above the 3x3 reaching mentioned level. Here is also 50% level has been exceeded. Market slightly hasn't reached the 618 level. But still the top was relatively close to overbought monthly overbought area in 27,662 level. That's what we have for the monthly. Correspondingly, if this is really the brand body trade, then the target will be 618 support to the downside. So it's approximately will be around 110, 111, somewhere in this area. That should be the destination point if this is indeed the brand body setup. On the weekly chart, market stands at overbought, reaching additional 618 level from this reaction point. It is not the major level, but still it is important. That has happened on the pullback. This completing the one target of the butterfly. So, this great big butterfly. We also talked about this when we talked about the pound previously. The pullback hits the overbought and fib level. This combination in general showed Napoli bearish stretch pattern that suggests some retracement down. So despite that we have bullish trend, context stands bearish. It's just because we have directional pattern, and as you know from the Napoli framework, that direction overrules trend. So it means that here we also have bearish context, although the stretch itself is not really very strong directional patterns because it's contra trend pattern. Finally, on the daily chart, what we have completion of our ABCD pattern that we discussed. So you remember we said that probably the brand body could get the chance of starting right from the 2450, just because here we have the ABCD of this OP of this major ABCD pattern, and indeed one that has been touched. As you can see, collapse has started. So trend stands bearish. Context on the daily chart also stands bearish right now. From that standpoint of view, that is the background to make an attempt for taking the short position and check the starting points of the monthly brand body. So here as we make the one assumption that it has started. If we are correct, then market should not take it out of this top. So it means that our invalidation point will be somewhere on this level. If somehow market still will break it up, it means that our conclusion is wrong and probably brand body could start from the different level. In this case, we probably will be watching for upward continuation or reaching of this strong resistance 618 level and overbought on the monthly chart. If this will happen, it will not break the context of the bread and butter, because for a bread and butter, market has to reach important level, major level, within the 3 closes above the 3x3. Here we have the first close, second probably will be in the December, and we also get another month. And level could be absolutely different, so it might be either this level or 618. That's why from that standpoint, bread and butter still remains valid. So, but first we're testing this idea with this probable starting with a bread and butter trade. Finally, on the 4 time frame chart, you can see market has formed bearish reversal action swing, because this downward action is greater than the previous upward action. And in general, if we take a look, this upward consolidation, tight consolidation has been broken. Also, we have here is a bit wider support line. So maybe it's also later we will keep an eye on what will happen with this trend line as well. But in general, you can see currently that tendency of high lows and high highs have been broken here. This market has formed a lower low compared to this one, and creating by this bearish reversal swing. Meantime, this upward action was relatively long term, and market needs some time to fade the momentum of this upward action. First leg has happened. Now, guys, take a look. We have the tight consolidation. Once again, this choppiness might be by the same reasons. A thin market, just no activity, and so on. And here inside of it, we have the 3 drive buy pattern. This minor pattern has been formed. So if you calculate the swings here, you'll see that third drive is a perfect combination of the 127 extension of the first swing, 127 from the second, 1618 from the first. The minimum target of this pattern is taken out of this probably top. This top between the second and third drive. That's why before taking the position, it makes sense to, well, maybe choose a bit higher standing level. So this confluence with 122, 122.40 seems interesting. So we're first approximation of the possible entry on the short side. So here is probably should some upward action could happen, but that's 2 levels, and actually 22.96 is, also stands relatively close. So just difference around the 50 pips. So that's the resistance cluster that we could consider for possible taking the short position. That's what we have currently on the cable. And here you also could see by yourself that recent action on the Japanese yen absolutely make no impact on the performance on the Great British Pound, which is also, as I said, means something.